Good afternoon, everyone. It was a pretty important day in the markets today, as far as I'm concerned, and that is because we saw the tech tape turn around. In other words, we saw a move higher in those broad tech companies that have been selling off for a week and a half now, with the Nasdaq down by 10% from its record highs. Well, today it was up by 3.6%. So it is now down 8% off the record high. So it's now not in correction territory. And I think most importantly, you saw some stability in the tech space. In other words, the bleeding has stopped. Now, why did that occur? And the question, of course, is whether or not that's going to be sustainable. It seems though the key reason for the tech bounce back is because the U.S. 10-year yield, which we've talked a lot about, did pull back from that 1.6% level that it hit yesterday. It closed or was trading around that 1.52% today. So the pullback in that higher interest rate environment alleviated some of the downward pressure that we've been seeing on tech share valuations, and in fact obviously gave people a reason to buy back into the tech space. Now, adding to that, of course, is the positive outlook from an economic perspective with respect to the vaccine rollouts, and also, of course, the stimulus. Looks like a $1.9 trillion COVID relief package plan south of the border. And the vaccine news today as well from the Pfizer BioNTech vaccine, that it seems to neutralize that Brazil variant in a lab study, is obviously also a positive. We also had David Tepper, I mentioned this yesterday, a famous hedge fund investor, billionaire hedge fund investor in the United States, saying that he thought that the rates, when they hit that 1.62%, had gone too far, and he also could see some stabilization occurring in the U.S. fixed income market, with the BOJ, the Bank of Japan, potentially buying some of those U.S. Treasury bonds, putting upward pressure on prices, downward pressure on yields. So it seems as though that has taken place, or we think that at least the sentiment of that is taking place in the market today. And therefore, you've got the tech shares rebounding a little bit. Amazon and Apple both up 3%. And you also, interestingly, though, have some of the broader markets participating well in addition. So the S&P 500 up by 1.42%, the Dow up by only 0.10%, the TSX up by close to 1% today. Now, of course, when you see tech shares move higher, you do see maybe an underperformance of those value cyclical areas of the market which we've seen perform so well as of late. You did definitely see some profit taking there. So meaning that the XLE that I look at in the United States, that's an energy ETF, was down by about 2%, and the XLF in the United States, the financials, down by about 1%. So you did definitely see the growth momentum area of the market outperform the value cyclical area. Likewise in Canada as well, energy was down a little bit today. Not to the same degree that we saw in the United States, down by 0.13%. When I look at the XEG and the XFN, a financial ETF I look at here, was up by 0.09%. So we didn't see the major moves that we saw in the United States, either up or down. Cannabis was also working well here in Canada. Gold also up. Oil predominantly lower today. And the Bitcoin area of the market, cryptocurrencies, crypto assets, Bitcoin was up by about 6%. So the fund I always look at, QBTC, was up by 6% as well. And another Bitcoin ETF launched in Canada today. Stepping back from all of that, just a couple stocks to mention as well. Tesla was up by about 19% today. That's on upbeat car sales out of China. Also, Peloton was up by 12%. They are launching in Australia. That's the first time that they're entering the Asia Pacific region. They're going to have the original bike as well as the second bike, and also, of course, the Peloton app. So that stock obviously higher. And we're also watching Boeing today. Some positive news there. For the first time in 15 months, they're going to have positive net orders. So that stock was up by 3%. Away from that, we're going to keep our eyes on tomorrow here in Canada with comments from the Bank of Canada. We're going to have to really listen closely to see how they're able to manage the possibility that we will, in fact, see some improving growth here in Canada in 2021, really driven by the energy sector, which has obviously benefited from the move higher in WTI, and also the strength of the housing market. Also, the U.S. economy looks that it might be set up as well for some nice strength, just given the continued support from the federal government with that $1.9 trillion stimulus plan, and also, of course, the central bankers continue to have your back. Bottom line, when we look at the movements today might be described as somewhat as a Goldilocks environment for stocks. I'll leave it there. We'll see what comes tomorrow. Have a great night.